Welcome back to the deep dive.
Oh,
Okay, we've got a fascinating stack of sources today, really digging into the crypto market from, well, a few different angles.
yeah, it feels like a snapshot of, well, everything happening at once, doesn't it? You've got the big institutions making moves alongside some pretty wild stuff in specific coins.
Exactly. We're seeing traditional finance getting more involved, analysts predicting what's next, and then updates on specific projects that, frankly, caught my eye.
Mm-hmm.
And the big headline, I think, has to be Societe Generale. The sources say they're planning to launch their own USD stablecoin.
Right. That one definitely stands out. I mean, Societe Generale, that's a major European bank.
It is. And this comes from a CoinMarketCap piece, a guest post by Coindo.com, specifically mentioning this plan.
A bank like that launching its own dollar-pegged stablecoin. It's not just dipping a toe in anymore. That's a serious statement.
And where they're launching it is interesting, too. The source says Ethereum and Solana.
Okay, see, that's significant. Choosing public blockchains like Ethereum and Solana.
Yeah. Why is that so key, you think?
Well, for a big regulated bank going onto public chains instead of, say, a private permission one, it suggests they see these networks as fundamentally important infrastructure, like maybe the future rails for this stuff.
Infrastructure they can actually plug into, potentially tapping into existing DeFi ecosystems.
Potentially, yeah. Or at least positioning themselves right where the digital asset action is happening. It's a kind of validation for Ethereum and Solana, too, wouldn't you say?
Definitely feels like it.
Yeah.
Okay, so let's unpack this properly. We'll start with SocGen, then look at these other sources covering market sentiment, some specific altcoins, other institutional stuff.
Yeah.
Let's dive in.
Sounds good.
All right, so nailing down that core fact. Societe Generale, major bank, launching a USD stablecoin, and crucially, on Ethereum and Solana, these public chains.
Right. And you have to wonder about the competition, you know? They're stepping into a ring with giants like Tether and Circle already there.
True. What's their angle likely to be? The sources mentioned they're focusing on regulated use cases.
Seems that way, initially at least. Targeting institutions, maybe cross-border payments, settlement, areas where regulatory clarity is, well, paramount.
Okay, that makes sense. Now let's shift gears completely. One of these articles gets into specific tokens, Bonk specifically. It mentions BONK facing some, let's say, challenges. A 28% dip over the month.
Yeah, I saw that, but then you see the other side of the coin, quite literally.
Right. Here's where it gets kind of wild. The source highlights these incredibly high APY offers, like 69% APY, and another one at 319% APY.
Whoa, okay, 319% APY. Those kinds of numbers, they immediately signal something about risk, right? And probably inflation or the sustainability of that yield.
Definitely high risk. How are those yields usually generated?
It can be complex. Often it involves, high token emissions, basically printing more tokens to pay the yield, or very specific liquidity pool mechanics. Getting that yield out in stable dollar terms isn't always straightforward.
And the source even mentions a potential ROI figure with this, 2,429%.
See, that just screams speculation. Extremely high risk, potentially high reward, but yeah, very volatile. What does that juxtaposition strike you, seeing those APYs next to a price drop?
It's just,
Yeah.
it highlights the sheer range in this market, doesn't it? You've got SocGen building regulated stablecoins on one hand, and then these sorts of high-octane yield opportunities on the other. Different worlds, almost.
Different strategies, different risk appetites, all coexisting. Yeah.
And speaking of market moods, another source flags a prediction from analyst Michael van de Poppe. He's apparently calling for an altcoin season soon.
Ah, the classic altcoin season prediction. What's his reasoning, according to the source?
Pretty standard signals, it seems. Bitcoin dominance, the idea that money flows from Bitcoin into alts after a BTC run.
Right.
Market cycle stuff.
Right, the capital rotation theory. Bitcoin runs, consolidates, then flows down the risk curve. It's a pattern many look for, though whether it plays out exactly the same way each cycle, especially now with more institutional money, that's always the question, isn't it?
Good point. The context is always changing. And on that context note, there's a macro piece here too. A source mentions the Bank of Japan.
Oh, what are they up to?
Looks like they're delaying reducing their balance sheet and maybe even considering bringing back some selective quantitative easing, QE.
Okay, that's significant on a global scale. More QE or even just not tightening. That generally means more liquidity sloshing around the financial system.
Right. Keeps money cheaper, basically. And that often pushes investors towards riskier assets looking for better returns.
Exactly. So things like stocks, commodities, and, potentially crypto benefits from that environment too. It acts as a potential tailwind.
So you've got this potential macro support alongside the internal crypto dynamics like SocGen's move and these altcoin plays.
It's a complex mix, yeah. Top-down forces meeting bottom-up project activity.
Okay, let's zoom back into specific projects. One source lists some top pre-sale crypto picks for 2025. Ever heard of these? Blockdag, Dogs, and Snorter.
Blockdag has been getting some buzz. The source mentions a specific number for them.
It does. $291 million raised in its pre-sale, apparently.
Wow, okay, $291 million is, oh, that's a lot for a pre-sale. Shows significant early interest, or at least effective fundraising. What about the others, Dogs and Snorter?
The source mentions them more for strong community and potential for viral growth. Kind of the meme coin angle, perhaps.
Knows like it. Community and hype are powerful forces in that corner of the market.
And Blockdag pops up again in another source. This one also mentions Tron, signaling a 14% decline, but then pivots back to Blockdag, reinforces that $291 million figure, and adds something new. Blockdag is apparently teasing an NBA deal.
Interesting pairing. An established chain like Tron showing weakness, while this newer project that's raised a ton is hinting at mainstream partnerships like the NBA.
Yeah, what does that signal to you?
It just illustrates the churn, I think, how quickly attention and capital can shift. Established players aren't guaranteed to stay on top, and new projects can generate massive hype, rightly or wrongly, very fast. That NBA tease. We'll see if anything comes of it, but it's clever marketing.
Definitely gets attention. Okay, one more piece. Circling back towards that institutional TradFi integration angle, a source talks about Canary Capital.
Canary Capital, right. What are they doing?
They've apparently spun up a Delaware trust. The purpose for something called a Canary Staked INJ ETF.
Okay, hold on. A staked INJ ETF, that's pretty specific.
Yeah, INJ being the token for the Injective blockchain. The source notes setting up a trust like this in Delaware is often the first step towards launching an actual ETF product.
So they're not just looking at a spot Injective ETF, but one that specifically includes the staking yield.
Seems like it. Packaging the staking rewards, that native crypto yield mechanism, into a traditional finance wrapper, like an ETF.
That's fascinating. It's a step beyond just basic price exposure. It's trying to bring the mechanics of crypto yield into the regulated financial world.
So if you compare that to the SocGen move, building the stablecoin infrastructure.
Right. SocGen is like laying the foundational pipes, maybe. Canary Capital here is trying to build a product that taps into something more complex, like staking yield on a specific chain.
It really shows the different ways TradFi is trying to engage, doesn't it? From foundational stuff to more sophisticated products targeting specific crypto-native features, all drawn from the sources we looked at today.
Exactly. It's not just one monolithic institutional adoption narrative. It's diverse players exploring different angles.
So, wrapping this up, what does this all mean for you listening in? We've covered quite a bit today based on these sources. Big moves like Societe Generale launching a stablecoin on public chains, potentially signaling deeper integration.
Yeah, and Canary Capital exploring how to package something like staking yield into an ETF format. That's another bridge being built, potentially.
And then we saw analyst predictions, like Michael Van de Poppe anticipating an altcoin season based on classic market cycle indicators.
Plus, that macro context from the Bank of Japan, potentially more easy money, which could influence risk assets like crypto.
And we dove into specific projects. Bonk, with that huge price dip, but frankly astonishing APY offers, mentioned 69%,
right.
Even 319%.
Right, highlighting that high-risk, high-reward speculative element that's still very much alive.
And the pre-sale scene, with Blockdag reportedly raising $291 million and teasing big partnerships, alongside others like Dogs and Snorter focusing on viral growth. We even saw that contrast with Tron's reported decline signal.
Pulling it all together from these reports, it really paints a picture of a market that's, well, multifaceted and evolving incredibly quickly. You've got serious institutional infrastructure being built.
While at the same time, the more speculative, high-yield, fast-moving native crypto stuff is going full steam ahead.
And understanding that both these things are happening simultaneously, influencing each other, that's kind of key to making sense of the noise based on what these sources are telling us.
It means realizing the market isn't just one thing. It's global macro policy, it's bank strategies, it's analyst cycles, it's tokenomics, it's pre-sale hype. It's all churning together.
Absolutely.
So maybe a final thought to leave you with, based on all this. Consider how these very different threads establish banks like SocGen building regulated bridges firms like Canary exploring complex yield products, and projects promising huge returns or relying on viral marketing. How do they all coexist?
Yeah. How does the perception and the reality of the market get shaped when you have such contrasting developments happening side by side, all reported in the sources we see day to day? It's something to think about.